Tim, thanks for being with us today.
Hey, thanks for having me.
The Medalist recently announced its fifth consecutive quarterly dividend since its IPO in the fall of 2018. Where does the company stand today?
We just announced the dividend for the fourth quarter. We are very, very close to full dividend coverage, given the 6 properties that are in the portfolio currently. Cash flows projected for next year show that actually not using capital expenditures, we are fully covered next year on our dividend.
So what's your strategy in terms of buying these properties? And talk to us a little bit about the current properties.
Well, our current properties consist of Franklin Square, which is a shopping center in Gastonia, North Carolina. Second property up is a Hampton Inn in Greensboro, North Carolina. We just finished a full renovation on that property July 31st. We expect income to increase as a result of that. The third property is Hanover Square in Mechanicsville, Virginia, just 6 miles north of Richmond. That property is cash flowing above 10%, as is Franklin Square. The fourth property is Ashley Plaza, located in Goldsboro, North Carolina. It's a 164,000 square foot shopping center. Again, it has diverse tenants. It's cash flowing well above 10%. The fifth property is one that we're very excited about. Not that we're not excited about all our properties, but we were brought an opportunity to purchase a Best Western Plus hotel in Clemson, South Carolina, which we completed on September 27th. We're expecting very good things from this property. We feel like we got a really very good price on it. It was undermanaged and undermarketed. The sixth property is a flex industrial property located in Greenville, South Carolina, not too far away from Clemson.
Now you're focused on the secondary markets. Why?
The secondary markets offer a lot more yield than the primary markets. We do not compete with institutional buyers on a regular basis. The cap rates in our marketplace are 7 to 9% in the secondary and tertiary markets of the Southeast.
I want to talk about your background, your management team, because you have a history of creating very successful funds paying dividends.
Sure. My background is capital markets. I've spent over 20 years in the institutional fixed income capital markets, focused on structured fixed income for 20 years before starting Medalist in 2003. My partner's now the president and vice chairman of the REIT, spent his career in commercial real estate. He was the past president of a large regional full-service commercial real estate firm in Richmond. He had a fully staffed at 70 employees. They produced every aspect of commercial real estate, investment sales, property management, etc. So we make a good complementary management team. We have a great CFO in Brent Wynn. We're backed up by 2 property management companies. Dotson Companies has 100 full-time employees, and Marshall Hotels and Resorts that has 35 full-time employees. So both property management companies back us up on a daily basis. They really act as partners, even though they're third-party property managers. They're on the team. We receive monthly property accounting. They take care of the maintenance and daily management of the hotels, non-hotel properties.
Now, in the previous funds, you had paid, I think, about a 7% dividend over a 5-year period. Is that correct?
First fund we started back in 2013. We paid out 8% every quarter since inception in 2013 through January of 2018 when we sold our last property. That fund produced approximately 13% overall IRR to our investors over about a 5-year period.
Yes, it's an excellent track record. There are very few small cap REITs in the public markets. What are your plans over the next 12 to 18 months in terms of acquisitions?
Well, so we want to continue to grow the company over the next 18 months. Long-term vision is to grow it over the next 3, 4, 5 years. We've got plenty of product to purchase. We want to invest in more properties over the next 18 months and grow the portfolio.
And are you confident that you can keep paying this dividend?
Given what we know right now, I am very confident of that, yes.
Tim, to recap, what's the main takeaway for investors today?
The main takeaway is a few things. First of all, we're one of the only small cap REITs in the country that has consistently paid dividends, not only in the REIT space, but also in our private funds. Medalist Fund 1 and 2. As I said before, we've got a complementary management team here. Both of us held senior positions in our former careers, so we know how to manage people, we know how to manage real estate. Secondly, we're buying in the Southeast only. The reason we're doing that is because my partner and I grew up in Richmond, Virginia. We know the area, we know the people. We both went to SEC schools, so we have really, really good on-the-ground intelligence, which is a real asset to us. Finally, the properties themselves. I mean, in our secondary and tertiary markets, we're seeing properties with a 7 to 9% cap rate. When you lever those properties with money in the 3 3/4 to 4% range, cash flows normally on these properties can be well over 10%.
Tim, thanks for being on the show today.
Thanks for having me.